Hello traders, it's Samurai Trader here. Welcome to this recording. Day trade your way to financial freedom using the strategy of Renko and Tick charts, a combination of both. As always, my videos are raw, real and unedited. I don't run to a script, so I may go off script, if I can call it that at times, but the purpose is to give you some really good ideas on how you can use these fantastic two chart types together as a combination. Now, as always, there is a risk in trading. If you're watching this video or one of my videos for the first time, please feel free to pause the video. There is always, and read the disclaimer, there's always a risk in trading. Don't trade with the rent money. If you haven't already requested my free training manual, please visit my website, or you can click on the link below. I've got two different manuals there. One is a general training manual and the other is the truth about day trading. Some really good information, and even better still, become a member. I've got over 5,000 members now. Probably around 4,500 of those are general members of a day traders fast track program, and I've got about 500 personal coaching members. So for $197 you can obtain my entire program. Very quick ad and I'll move on very quickly. There's over 200 hours of online video instruction. It's literally a gold mine, as one of my traders recently described my Google Drive. And I do new videos most weeks. There's new PowerPoints. I mean, there's just a ton of material. Visit my website and there's a video tour there where you can go and have a good look at everything that's included. But anyway, let's move on, because I really want to get into giving you some great information today. First of all, we know that there's many different types of charts, and this is just a very short list. So we've got our time-based charts, which probably the majority of traders around the world still use. We've got tick charts, volume and range, and Renko, which are very similar. So I love the combination of tick, and it used to be range, but TradeStation a couple of years ago bought out a new form of Renko charts, which are bricks, and they work really well. The previous form of Renko they had, it didn't show the tails, where now you can see the real highs and lows of the Renko brick. Now, so Renko's great, but there's some issues with it, and what I've discovered is that when you trade using both tick charts and Renko together, it really gives you a major advantage over the majority of traders that either trade just tick or that trade just Renko. So I'm going to show you some ideas, give you some ideas, I really should say, on how to use the combination. Now, first of all, you might want to take a screenshot of this. This is something that my coaching members have, which is my latest tick sizes and Renko chart sizes that I like, particularly for the Globex session and the New York session, for both CL and the ES. Now, remember, these strategies and ideas that work for all markets. It doesn't matter whether you're trading Forex or futures or stocks, the same applies. You just may need to adjust the different time frames. Now, if you're trading, say, using MT4, you may have to purchase a plugin which will give you Renko or range. And if you go onto the internet on Google, there's a number of vendors for around $50. You can buy really good plugins which will allow you to display both Renko and range charts. So have a look at this, and all of these times here are just subject to the speed of the market. You know, I chuckle away at myself where I say, you know, occasionally people say, oh, these strategies don't work. Traders, if you're trading with the trend, which is 95% of my trading, if you're trading with the trend, and as long as you're entering the trend at an early stage, how can you not make money? Now, I know what some traders are doing, they're rolling their eyes, but it's true. Wait till I show you the Renko charts in a moment. The only way you're not going to profit consistently trading with Renko is if you're entering the trend too late, or you're not, or you're exiting too early. But anyway, let's have a look at that when we get to it. Now, if you remember what I've done, this is a relatively new handout. So for members, in the folder new recordings and uploads, I've uploaded that as a Word document, so you can change that. Now, also there is a folder for the members that are not up to date with everything on Renko charts. There's a couple of great videos there on Renko specifically, and also the 2B. Now, our members are kicking butt big time with the 2B, a combination of the 2B and the 34B. It is killing it. So members, make sure you visit those folders. Okay, it's very important you review those setups. Okay, let's get back to this. So I want to give you a whole lot of information in under 20 minutes, so I'm really flying here. Now, because Renko charts have strict guidelines, is when Renko bars are to be plotted, and I know they're bricks, but we call them bars or candles, minor price movements are ignored and do not appear on the chart. Now that can be a hassle at times, as you'll see, but I'll show you the solution. Now this can, however, help the trader focus on only the essential price movements that are necessary in trading our strategies. Now they do have a different appearance. They're very smooth, but if you've say been used to trading time or maybe tick or even volume charts, it can be a little different at first. Now one of the beauties of Renko is that it does ignore minor price action, but there's a negative to this, because when you have a really strong trend, as I'm about to show you on some slides, there's no other points that you can really re-enter. Okay, that is, I like to re-enter the market using what we call trend continuation trades, as I'll show you today. Some pullbacks, retracements, very important. So what we want to do here is be referring to a tick chart on a regular basis, very similar to the time frames that I showed you here. And so if you pause this, you can take a screenshot. So this is only, as I mentioned, for CL and for ES, and just the time frames that you create just need to be what I call tradable, but it's important that you have what we call an entry chart and an anchor chart. Very important. So also we need to consider there the 3 trading sessions. That is, we know that New York is where the most volume, at least for stocks and for futures, is traded. London is the largest market there for Forex. So we have different speed of the market. That is, New York of course really pumps. If you're trading futures, it slows way down for the Asian session and picks back up for London. And the reason I bring that up is we need to have different time frames, and so hence on that Word document we have a number of different time frames there for the New York session, leading then the Globex session into London, and all subject to the speed of the market. So let's get into it. What I've got here, traders, is a tick chart. So this is a 233 tick for the New York session of the CO market in trading the black gold. On the right here I've got a 4 tick Renko. Okay, they work really well together. One of the things that we miss on Renko is what I call price bubbles. These are very tradable and very profitable, and you can see here, and I call them T3 bubbles. And so note, you've got great angulation away from your EMA, so you've got great movement here, and your entry is well and truly away from our gold EMA. So you had a nice entry there and here. Not quite as obvious on our Renko chart, but look how smooth the Renko is. But we also had what we call the rule of 1 here, rule of 1, rule of 1. You had a nice 2B here, and you had a 2B here. Your 2Bs are real runners. Now here, that was worth at least 20 ticks, 200 in that move. Likewise, you had the potential there of that sort of move on this side. So they can work really well, as far as you may not have a pattern here, but look how smooth it is. But you look over at your tick and there is definitely an entry at that point. Now what I recommend is that you, if possible, that you have a minimum of 2 screens. So one, you've got your tick, your entry and your anchor chart, and the same with an entry and your anchor chart for the Renko, and you're looking at both of those at the same time. And ideally, of course, you want to be trading with the trend. Now these are counter trend moves, obviously. Once you master the trend trades, then you move on to the CT trades, the counter trend trades, but you start with the trend trades. So let's just have a look at this here. One of the things you'll notice quite often on Renko is that we're missing what I call divergence. Now I use a unique MACD for my divergence, and when you become a member I actually give you the settings of a standard MACD that will model this. If you've got TradeStation, I actually give you all of my indicators that I use, and for NinjaTrader I've got them all except for this MACD, but I give you the settings to get very close. I like a nice tight MACD. So what you'll notice is quite often on your Renko you don't have divergence, but you will have divergence on your tick charts. Okay, now this here is a 2B right there. Okay, very profitable, great. They're just great trades on, basically it's a good 80% trade on virtually every market. Here is a case of exactly what I mean, where you get a great move. Now this is during the Globex session, so this is the black gold oil, 2-tick Renko, and every one of those little steps is 1 tick. Each one of these bricks is 2 ticks, $20. Each one of those steps is worth 1 cent or $10. Now you can see how smooth that is, but the issue with it is when you get these straight moves, and quite often these are very tradable, they're not always fast moves, where on the tick you'll get a number of slingshot entries or pullbacks or 34Bs. You'll get them on your tick, but you won't get them on the Renko. Now here's another scenario. This is a 2-tick Renko CL during the Globex session. Most of you are aware I absolutely love pivot bounces. If you're going to trade counter trend, if you trade a CT trade with a pivot, it dramatically improves the probability of that trade coming off. But what I also like to see ideally is either divergence, or on my tick chart I want to see that bubble T3 formation. Okay, and before we go to the next chart and I show you that, there's also another issue. When we go into a period of consolidation, I want to see a slingshot to confirm the breakout of that period of consolidation, and I don't always get that on the Renko. I actually had one here, so I actually had one confirming a breakout, but you don't always get it on Renko, but you usually get it on tick. Now let's just have a look at this. What we were just looking at was, let me go back as a reminder, here is the move with the Renko and a pivot bounce. Now let's have a look at this on the tick chart. So straight away you may notice this is an 89 tick. So for the Globex session I love the 89, not the 233. So the 233 is for New York. You'll use the 89 during the Globex session. Note how price action here is gapping away from the trigger line here. See that? That is a fantastic signal, and look at it on your anchor chart, which is a 233 and an 89. Okay, that's your entry and that's your anchor. That gapping that's just a brilliant signal that you're going to have a reversal. So we've got a gapping away from the trigger line, we've got great angulation. So what do I mean by angulation? Note how price is angled right away. This is a mean reversion trade. Very high probability when you get these. Now when you've just got your Renko up, it's not quite as obvious, okay, but when you've got your tick there and you see this, okay, I'm going to sell here. I'm definitely going to sell. And last of all, just on the tick, here's another example. This is live trade where I just shorted 5 on the NQ. Now this, by the way, is a 55 tick during the Globex session. This was and I was lucky to get filled at that stage. I actually put a limit order in, and quite often I only get 1 or 2 contracts filled on the NQ. I don't trade the NQ too often now because of the issues with fills. It's very thinly traded until you hit London, then it really starts to pick up. But the point is here, this is this bubble formation I mentioned. Look at this over here. See how price action here, by the way, I use a 55 tick for the entry and the anchor's 144, but see that bubble, how price has popped away, it's angled away. This is one of the great things about tick charts that you can really miss out on. However, Renko has some major advantages. So let's go and have a look at a couple of examples here. So what we're looking at here, traders, is the ES. So this is the ES during the New York session. So market open down here at 9:30. Generally speaking, I want to wait at least 15 minutes for the market to settle down. I call the first 15 minutes, particularly on the ES, it can be known as what we call the killing field. Okay, you can get some crazy moves in the first 15 minutes. Not quite so obvious here on Renko. Now, but what I wanted to show you here was this. See how smooth the Renko chart is. Now we've got multiple slingshot trades here. You've got quite a few different types of trades, and for members watching this, this is what we call T8 action all the way down. Okay, so if you looked at your anchor charts, you would have seen that the ATR supported. You want to be taking every single short. But let's have a look at the 550 tick chart. So what we're looking at here, this is this high up here. Market then rolled over. Okay, so we then had the market rolled at 9:31 and down it comes. But notice here we had a pullback. This then formed a great 2B. So you had a 2B right here to the short side. Now if we look at the Renko chart, that was that point right there. Now it actually was a 2B also on Renko, but notice how smooth it looks. This is also a 34B and a 2B. So if you're trading below 2% risk, that's where you want to double up. Very, very high probability trade, and that's it there. So the advantage of having your tick charts up, once again, look at these entry opportunities, the pullbacks and 34Bs we had all the way down. Let's now go and have a look at CL. So what we're looking at CL here, this is CL 4 tick. This is during the New York session. Let me get this right when we're trading here. Once again, beautiful and smooth. Let's now go and have a look at the 233. So this is the 233 tick chart for the same time frame. Now can you see how much choppier it is? However, and let's just note that little point there, and let's go to there. That is that point right there. Okay, so there's quite a difference between tick and Renko, but let me show you a couple of things there that are really important. First of all, where are we here? I just want to go and show you let's see here. What's CL? Let me just pause this. I want to show you a couple of setups. So here is one specifically. Now what we've got here is what we call a 2D on the 233 and 610. So during New York, I want to have a 233 tick and a 610 as the anchor. Note here I've got no divergence. I've got a really nice move. It's also bouncing off the $57 mark. Now remember, with CL we have some really important levels. You've got your 57, your 80 cents, your 20 cents, and your round numbers, your 50, 56, 57, 58, etc. You've also got your floor pivots. So up here you can see price rallied right up beautifully, and we think, okay, I don't have any divergence. Yes, I've got from my entry some good distance to the gold. Yep, I've got that, but it'd be nice to have divergence. So then we look over at our 233, and let me just scroll over for you here, and what you discover we have is this. We had great divergence here, so that's the same entry there, divergence, and here both pivot bounces, naturally the pivots of the pivots, but I had divergence and divergence. What that does is has a massive probability increase in this counter trend trade taking off. Likewise, here's not a great sort of example because we do have lots of entries on the way up here, very, very profitable entries. But when we look at the 233, it's perhaps let me scroll back over here. I've just sort of got this on the one screen just for the sake of recording. Okay, it sets up, whoops, well, it was about 9 o'clock, wasn't it? So let me get the right area for you. That's about it there. Okay, so you had quite a number of other potential entry points. So the key point here is, traders, you can dramatically improve the probability of your trading by using a combo of Tick and Renko. Now we know that the 34Bs are a good 75% traded correctly. Your 2Bs are a good 80-85% trade when you trade them correctly. What you can be doing as you trade both Tick and Renko, okay, so you've got your Tick up, you've got your Renko up, you can be trading the same setups on two different types of charts. This also overcomes some of the issues that we sometimes have with what we call boredom, that is waiting for the setups. You hear me talk about many times. I really recommend it you focus on one market, particularly if you're day trading. You really want to get to know the personality of that market, and of course you want to be trading with the trend. Okay, so when you've got two different types of charts, okay, you'll get different entries at different times. So traders, if you haven't already subscribed to my YouTube channel, please do. Better still, become a member, join the Day Traders Fast Track program. You'll receive, it's just a massive gold mine, and of course of information, and of course included in your membership is unlimited email support. Thank you, members. Hopefully thank you, traders. Hopefully I'll see you as a member soon. Thank you.